Hello everybody. So today I've been working on a new spreadsheet and I would like to present it to the channel. So one of my issues with the most undervalued growth stock spreadsheet is that I'm not looking forward enough in the future, right? What matters to an investor is what's going to be that revenue number when you sell the stock, right? If you buy a stock as a long-term investor, you probably intend to hold it for, 5 years, maybe 10 years. And what matters is how big are those sales going to be 10 years from now, right? And then as a multiple of those sales, you will get the market cap. The market cap will be a multiple of those sales. That's at least what matters to me. And so this spreadsheet, I try to move beyond just 12 months and predicting, or not predicting, but like guessing the valuation on a per 12-month basis. And I try to move forward with the multiple years that have been guided by few firms. But a few firms we've been lucky enough to have a long-term guidance. Some CEOs are bold enough to take the risk and give us really long-term guidance, which is so helpful to me as an investor. So let me just show you briefly the spreadsheet, and keep in mind those numbers are the numbers that have been said in the conference calls, communicated in the investor presentations, and so those numbers are not my numbers, they're their numbers. So let me just show you an example with Tesla. So Tesla has guided over and over again. I've listened to so many earnings calls from Tesla. They've guided over and over again. We're going to grow at a 50% rate. Some years more, some years less. But we'll be growing at 50%. That is what they have guided. That is what they're guiding. That is what they said on the last call. So that's very bold. That's a very bold growth rate. And by the way, they said until the end of the decade. And all of this spreadsheet, I only go until full year 2029, which means that you would probably find out, say in March or February 2030s, when you would find out if they actually achieve the full year revenue. But based on Tesla's guidance, right, looking at today's revenue, so the past 12-month revenue, that was $81 billion in revenue over the past 12 months, assuming that they're going to grow at 50% each year for 1, 2, 3, 4, 5, 6, 7 years, you would get to $1.39 trillion. And I know it sounds insane, but it is what they have said, and it is the nature of exponentiality and exponential growth. Like at some point, the law of large numbers is going to kick in. But as a company like Tesla keeps introducing products, my research that I've done on STEM really makes me extremely bullish on the megapacks that Tesla is selling and the storage system. So how many S curves is Tesla going to be able to stack on top of the auto company? I mean, if you ask me, those megapacks are going to be a tremendous S curve, perhaps the same size as auto. So who knows where the megapacks are going to pick up in 2026, 2027. I don't know. That is what they have guided. So that's what I'm using here. They've given me a number, 50%, and they said until the end of the decade, right? And all of those numbers you'll see in the spreadsheet are a number and then until a date, right? So that's how I get to those numbers. So assuming Tesla's numbers hold true, which they have guided, and assuming a compression of a price to sales ratio, which you typically see when growth slows down. But let's just assume that there's going to be a compression from today's price to sales ratio. You would be at end of 2029, so you'd find out in 2030, early 2030 when you found out, you'd be at almost a 12 times your money, and that would be a 43% internal rate of return. So every year, it will be a 43% compounded rate of return over each year. Now, assuming that there is no change in the price to sell, you would be at the 50%, and it's logical because if you don't have a change in the price to sales, the growth in sales is going to equal the growth in your returns because you don't have a change in the price to sales. So that is logical here. and that would be a 17 times. And assuming an increase in the price to sales, and you know, a lot of people, maybe not for Tesla, but for some other stocks, a lot of people argue that stocks are very undervalued right now in tech. And I believe a lot of the tech stocks, like HIMSS, for example, would be an example where I definitely think there's going to be price to sales expansion on HIMSS, for example, if you ask me. But if you grant the same leeway for Tesla, there could absolutely be price to sales expansion for any stock. So assuming there were price to sales expansion of Tesla, you'd get to a 24x your money, which is just stunning. And by the way, the price to sell, I took what I think is more relevant over the long run, which is a 5% decrease. So each quarter, each year, you have a 5% decrease in the price to sales. That's my negative scenario, and my positive scenario is a price to sell expansion, and I increase that price to sell by 5% each year. So depending on the market and opportunities. But clearly, Tesla is the company that has provided the boldest guidance, and the guidance that is the most out, like all the way far out till the end of this decade is when they've provided the guidance. So Tesla has taken a huge risk providing us a bold guidance, and it gives me a lot of comfort to know that it's what they've guided, because you know they've exceeded $1 trillion in valuation over the past 18 months. Of course, they're way back down now, but they've already reached a major objective. Can they reach another major objective? And it gives me a lot of confidence that it's what they guided. Okay, another company is Cloudflare. Cloudflare has given bold guidance. They said that they would achieve $5 billion in revenue by the end of 2027. So $5 billion by the end of 2027. We have everything we need. We have the current sales of today. We have their goal number, and we have the year, so we can calculate back the guided growth. So they've guided 39% is what they've essentially guided over 5 years. 1, 2, 3, 4, 5. So over 5 years, they've got it 39%. Using the same method, right? How many X would that be after 5 years? That'd be almost a 4X in the negative scenario, a 5X in the neutral scenario, and a 6.5X in the positive scenario, with amazing annual returns, right? From 32% to 46%, depending on whether one believes there's going to be price sales expansion or not. Now, HIMSS, as you know, I love HIMSS, and I think HIMSS there will be price to sales expansion, if you ask me, for HIMSS, because they're extremely undervalued. Right now, the current price to sales is a 3.78, so you can see it's significantly lower than all of the stocks that I have. I have 3 more that I show you next slide, significantly lower. I think I'm betting for me that there will be some price sales expansion, but nonetheless, even if there's none, HIMSS has guided some pretty good returns. Like in the negative scenario, we are at a 25%, in the neutral scenario, 32%, but in the positive scenario, expansion scenario, which is what I believe will happen, because this company is undervalued in my view, you're going to get a 38%. So again, this would be amazing. Not advised, by the way, just me telling you my numbers, and for entertainment only, of course. But nonetheless, very good in my view. Then moving on to Palantir, and I'm grateful for Palantir. Palantir is one of these other companies, along with Tesla, who went bold enough to give us a long-term revenue guidance. Palantir has been saying they will be growing revenues at 30% every year until the end of this decade, is what they've been saying. Right? Not as big of a guidance as Tesla, but there's a lot of comfort in this guidance, and using the same numbers given to us by Palantir, we can see that it will be 24% in the negative scenario. In the price sales compression scenario, it'd be 24%. Neutral scenario, same as the growth rate of revenue, so 30%, and assuming expansion, 37%. Moving on to Crowdstrike. So Crowdstrike has been kind enough to give us 3 years out guidance at 32%. They were getting $5 billion in annual recurring revenue by the end of 2025. So we'd find out in 2026, but they have a little bit of miscellaneous revenue on top of that. So extrapolating, you get about a 5.11, maybe 5.2. But assuming compression, that'd be a 25%. Again, annual, right? Remember, it's a 2x over a period, or an annual return of 25% once, 25% twice, 27% three times. So this compounds, right? There's the beauty of compounding. Neutral, you'd be at 32%, and with an expansion in the price to sales, you'd be at 38%. And the last one is a Snowflake, which is a stock that I've sold given their disappointing recent guidance. But if the stock dropped, I think the stock is very expensive. But if it dropped, I'd be willing to value more. As you can see, why I tell you it's expensive. It's a 21 price to sales. The price to sales currently on Snowflake is a 21. If you look at all the stocks in my spreadsheet, Crowdstrike, you're at a 13. Palantir, you're at a 9, right? Okay, Cloudflare is expensive too, at a 19, but Cloudflare has given us much bigger guidance than Snowflake, right? I mean, remember, this is incrementally, this is bigger guidance than Snowflake, and Tesla is at a 7. So Snowflake is the most expensive. I'm hoping it re-rates at a lower value, but anyways, the point is for Snowflake, if you're assuming that price to sell is going to hold over it's a 6-year period in the case of Snowflake. If you're assuming it's going to hold, that would give you a 24% in the compression scenario, 30% in the neutral scenario, and 37% in the price to sales expansion scenario. Although price to sales is so high, so I wouldn't be betting on an expansion of price to sales. And the guidance of Snowflake, of course, was a clean even $10 billion by the end of calendar year 2028, which we would find out in early 2029. Snowflake reports on a forward basis, so it's a little different in how they refer to their years, but nonetheless, this is right here. So again, all of these stocks, outstanding return. You see a pattern that though when a stock is willing to give us very long-term guidance, it's usually a good sign. It's usually a sign that the CEO has visibility on the business, right? It's not like CEOs can lie. It's they have a fiduciary duty. There's a legal aspect to lying when you're a CEO. So when a CEO goes out of their way and gives us a tremendous guidance like that, it removes uncertainty. And the removal of uncertainty makes, in my view, for me, it makes that investment less risky. And that's why I love always keeping in mind long-term. It's all about the long-term return, right? So anyways, this was not investment advice. This is just entertainment. Hopefully you were entertained. Thank you so much for watching. Please like and subscribe. Follow me on Twitter if you can. I appreciate all of your comments, all of your likes. Thank you and have a great day.